Ladies and gentlemen, welcome back to another Bitcoin video. We've got a couple big things to look into today. First of which, and the most kind of compelling of which, is a claim that was made recently on Twitter by someone called Tech Dev. You might have heard of him, but Bitcoin could be reaching prices as high as 45 to 50k this year based on a correlation between Bitcoin and the gold DXY chart. I don't necessarily disagree with this claim. However, I'm using it as an observation, not necessarily as a prediction. The second thing we're going to be covering, and a very important thing we're going to be covering, is the bearish argument and why I don't think it's correct. Now, a big part of the bearish argument relies on Bitcoin being dragged down by the macroeconomy, being dragged down by a recession. I'm countering this argument, and I'm putting forward a claim that Bitcoin is actually directly correlated to the DXY, not necessarily the rest of the macroeconomy. And there is sufficient evidence, in my opinion, to claim that the DXY could continue going down regardless of whether we see a recession or not, and hence Bitcoin could continue going upwards regardless of whether we see the macroeconomy in a good or bad state or not. For that reason, I think that Bitcoin has bottomed out, and I think that Bitcoin will continue to head upwards on a macro scale throughout 2023, potentially reaching prices as high as 35 to 40k. So let's get into the video, guys. Before we get into the video, check out the pinned comment, check out the description. We've got the VIP group down there. If you want to trade altcoins with the Wolves Crypto VIPs, you can do so. We've got the results. Check out our previous track record and make an educated decision. So thanks for that, and we'll get into the video now. So obviously the most important claim, it's not really a claim, by the way, this isn't a prediction. Again, it's just an observation that I discussed there in the intro was, you know, the gold versus DXY chart and how that relates to Bitcoin. So essentially there's an article that's dropped here on Cointelegraph, and it's based on a Twitter post by Tech Dev, essentially, that goes into the background between gold and how it relates to Bitcoin, and how gold versus the DXY relates back to Bitcoin as well. And essentially, you know, the whole narrative is kind of this, and you can see it really represented in the chart here. The whole narrative and the whole, you know, kind of theory is that the gold / DXY chart, and you can just observe it here for yourself, acts kind of as something that is very closely correlated to the Bitcoin USD chart. So you can see Tech Dev has kind of circled a few areas here, right? In the red here, you can see they're both topped out around the same time. In the blue, gold topped out a couple months before, bottomed out a couple months before, and Bitcoin followed. And they had similar structures leading up to the bull market. And within the bull market, had a similar structure because we have this support line on the gold DXY chart, and we had a support line in the Bitcoin USD chart. And we can see now in this orange circle, okay, Bitcoin and both the gold USD chart and Bitcoin has kind of bottomed out around the same time. And as you can see, you know, the gold DXY chart bottomed out a couple months before. And so it's a couple months ahead of the rally, right? They're both seeing the same rally, but the theory is that the gold DXY chart has had allowed that rally to play out for a couple more months because it bottomed out earlier. And so that the whole kind of observation is that Bitcoin should do the same thing, and Bitcoin should, just like the gold DXY chart, break above its uptrending diagonal line, and that would lead Bitcoin to a region around 50k, probably by the time it gets up there, maybe 45k, maybe 40k, something like that, right? So that's kind of the whole argument, right? And obviously it's very, you know, it's a very slippery argument. You can't really take charts like this too seriously, but it is very much worth noting because you can see that these charts have been pretty interestingly correlated. And if that correlation does continue, we could see Bitcoin actually skyrocket. And, you know, that's not exactly not supported by the charts. The macro momentum on Bitcoin right now is anything but dying off. And I'll show you this in a second. You know, we can see very clearly on Bitcoin, on the monthly chart, and we even could look at the weekly chart to get a better view of this wedge, but we're just going to look at the monthly here, that we have a descending wedge formation, and that descending wedge formation is on the verge of breaking to the upside, and that weekly candle does close in let's go ahead and check it out, in 2 days and 19 hours. And if we do close above that wedge, that will bolster macro momentum, right? Because that wedge has been playing out since literally, you know, January 2021. That will be a massive bump to macro momentum, and that could drive Bitcoin upwards. And, you know, the same thing with the monthly chart RSI. Looking at the bottom of the screen here, we have a support line on two previous occurrences, right, which marked the Bitcoin bear market bottoms in 2015 and 2018 that we actually lost in this bear market. Now we're getting back above it, and that monthly candle closes in 4 days. If we get back above it, that will be a significant bolster to Bitcoin macro strength. So it's not exactly out of the question. Okay, you know, we could do this. We could see something like this. If we see that wedge breakout and we see that break above the monthly RSI line, right? On top of the bounce off the 8-year support line on Bitcoin, on top of the weekly RSI break on Bitcoin, on top of the fact we've broken bull market support band, on top of the fact we've broken 300-week SMA, 200-day SMA. There's so many things that are happening on Bitcoin right now that if we see a couple more macro events, macro breakouts like we might see in 4 days here on the monthly RSI, we might see in 2 days here on the weekly wedge, we could see a similar occurrence here. We just keep skyrocketing and follow that gold/DXY chart. Who knows, right? I'm not going to make a prediction about it. I don't think it's necessarily enough evidence to make a prediction, but it certainly is a possibility. I would certainly say that the bullish argument is much stronger than the bearish argument on macro scale at this point in time. But again, take a step back, okay? Again, I want to really repeat that. I'm not predicting a 50K Bitcoin, right? Even in 2023, I don't think that will even happen this year, okay? I do think that we will certainly reach 30K this year, and I've gone over that chart multiple times. So it's a chart that kind of shows you horizontal lines on Bitcoin at 28.6K, relating it back to horizontal lines in previous bear markets and the fact that we'll probably get above that line around August or even before that period of time. But the fact of the matter is this, right? The next target is not 50K. The next target is 28.6K. That's what we need to be concerned about. But again, I'm just bringing it up for sake of interest here. It is pretty interesting to see that there is an argument to be made that we could be reaching those price levels, maybe 40K, at some point in 2023. So that's quite interesting in my opinion, and I thought I'd bring it up here on the channel. Now, before we continue, just a quick little advertisement here for the Bitget Exchange. This is the exchange we use in the VIP group. It's the exchange we use in this channel. 5 times lower fees than Binance. It's got a protection fund, so if something similar like the FTX crash does happen to Bitget, you can actually get a chance to be reimbursed for the funds you lost if you make a claim to the protection fund. If you sign up using my referral link, you're getting access to exclusive discounts, exclusive rewards. It's a non-KYC exchange, meaning you can sign up from any country in the world and use it for let's just say for tax reasons. It's pretty good. Okay, so that's the exchange. Go ahead and sign up using my referral link, and you might want to click other when you're signing up if you're from the United States of America. And yeah, that's basically it. So let's jump straight back into the video. And the next thing I really wanted to talk about was the DXY itself, because we've seen the gold DXY chart now, but what about the DXY itself? Because again, there is a strong argument to be made that the S&P 500 and traditional markets in general will drag Bitcoin down further, and perhaps the Bitcoin bottom isn't in. I want to make the case, and I want to make this case right now, that the DXY, in my opinion, is more important than traditional markets in general, okay? Because the DXY is what Bitcoin is directly reverse correlated to. When this thing goes down, okay, Bitcoin goes up. We've seen that happen time and time again. For example, 2017 bull market, this thing started a downwards trend just after the halving. And at that point in time, obviously, that's when Bitcoin started skyrocketing. And it bottomed out as soon as Bitcoin topped out. And then when this thing started going up, we saw the bear market, okay? And we saw the same thing happen in 2020 onwards from the COVID drop. Obviously, Bitcoin bottomed out in the COVID drop. And as soon as Bitcoin bottomed out in the COVID drop, DXY started going down, Bitcoin went upwards, right? During basically the end of the bull market, I'll say, for Bitcoin, as Bitcoin started seeing a double top and stuff like that, this thing saw a double bottom. And during the bear market in 2022, this thing rocketed, and Bitcoin, went down massively. And when this thing topped out here in October, that is kind of the period of time where Bitcoin started seeing some strength, and it's been dropping for the last couple of months. And in the last couple of months, or the last month specifically for Bitcoin, we've really seen the strength return back into the market. So the reverse correlation between the DXY and Bitcoin is quite strong. And the argument you can make is that, well, basically, in order for Bitcoin to keep dropping, we need to see the DXY go up again. Okay, here's why I don't think that's going to happen. First of all, we've got a massive ascending channel formation. Ascending channels are bearish formations. They generally break to the downside. So just based on that, you can expect the DXY to go down further. Also, the whole argument that traditional markets will keep dropping is basically based off interest rates, right? Interest rates go up, it tightens the economy, makes the markets go down, eventually triggers a recession, something like that. Okay, so essentially, right, the argument you would have to make for the DXY to go up again, and hence for Bitcoin to go down, is that interest rates will make the DXY go up again. Now, we simply just don't have to see this. Okay, we look throughout history, interest rates have skyrocketed. Look at 2004, right? Interest rates skyrocketed. Okay, in the period of time that interest rates skyrocketed, the DXY was in a sharp downtrend. Okay, look again here at 2016 through to 2018, 2019. Interest rates going up, DXY saw leveling and then a downwards trend. Okay, and right now, in fact, this is one of the only times we've seen in the last 20, 30 years where the DXY has gone up at the same time as interest rates. We're currently seeing a downwards trend on the DXY and interest rates are still rising, there's no reason why that has to stop. There's no reason why the DXY has to keep going up because of interest rates. And so you can make the argument that Bitcoin isn't actually connected to traditional markets. It's connected more to the DXY, and the DXY is not connected to interest rates. Therefore, the DXY could go down and Bitcoin could go up even if we see that recession occur on traditional markets. So I think that's very interesting. And I think that was worth bringing up. So yeah, there is a pretty strong case to be made here for Bitcoin that the bottom is in. And on top of all of this, I don't even need to speak about it because it's so obvious. 4-year cycle theory. Of course, 4-year cycle theory. Let's go ahead and bring that up. Now, this is obvious. We've been talking about this since November 2021. We've been talking about this since like 60K. Bitcoin did not top out with the traditional markets, okay? It didn't. The traditional markets topped out 2 or 3 months after Bitcoin did. For that reason, there's really not much reason to believe that Bitcoin will bottom out with traditional markets, okay? And guess what? It hasn't at this point. It topped out with the 4-year cycle and it's bottomed out with the 4-year cycle, okay? With that, we understand Bitcoin's reverse correlated to the DXY. The DXY doesn't need to go up again, okay? The interest rates is not a reason for the DXY to go up again, and it's in a macro bearish structure. The DXY very well could keep dropping and Bitcoin very well could keep rising as per the 4-year cycle theory. Okay, so I'm not necessarily at all at this point in time a believer that Bitcoin has to go down because of the macroeconomy. I think that the macroeconomy certainly does have a part to play in Bitcoin's strength. Perhaps Bitcoin won't do as well as it should do, okay? But I don't necessarily think that the macroeconomy is a reason for Bitcoin to see new lows. I simply just reject that. I reject that idea, okay? In the same way that I don't think the macroeconomy is a reason for gold to see new lows, I don't think it's the same thing for Bitcoin either. So that's my opinion on Bitcoin right now. Again, I want to really instill that point I made. I don't predict a 50K Bitcoin in 2023. I don't think that will happen. I think that's way too optimistic. I think at best we'll see maybe mid 30Ks by the end of the year, maybe 40K. Okay, so that's very important to note. I think this is a little bit optimistic, but it is very much a correlated chart, and it's very much something we need to keep an eye on. So we'll keep an eye on it, and that's what we'll do. So thanks for watching, guys. Before we end the video, I want to talk about the Crypto Academy. So the Become a Trader 10-unit course developed by myself and Megawell Crypto released around May last year. We have over, I think, how many students do we have now? Let's check the website. 86 students. I think we might have 90 by the time I'm making this video. You can become one of them. You can check out the website, check out the course itself, the blurb. We've got a description of the course. We've got the unit guideline, the unit kind of outlines here, what each unit is, how many slides, how many videos, how many worksheets. Gives you a good idea of how much content you're actually getting. And if you want a more in-depth information document about the course itself, go ahead and chuck us an email here at Crypto Academy Courses, and we'll send you actually a visual tour of the course, and we'll go through everything in about a 10-minute video, and you can make an educated decision about whether you want to join up or not. So thanks for watching. Hope you enjoyed, guys, and I'll catch you in the next one. Cheers.